Hey, top producers, listen to why our investors love us.
I'm Shariah, so I'm a local investor in Houston area and also branched out to Dallas. So I've been working with Ryan and his team for quite a bit, and I saw how he goes about doing the works and the projects, how proactive he is. And when I look at a partnership, it's a long-term partnership, right? And we would like to work with partners, or we'd like to work with others who we see doing deals with number 3, number 4, number 5, and Ryan fits into the category. He is proactive, he is actively looking at the assets, he has extremely good idea about the San Antonio, Austin, Houston, and Dallas market, so it just made sense to work with him.
Primary focus was in the mortgage business 26 years. Recently retired from that 2.5 years ago. I would say the influencing factor was Ryan. This is our first commercial venture. Ryan's been teaching me the commercial side of it, completely different than the residential side, but it allows us to step back, stay in a kind of semi-retirement mode, and let somebody else take the reins, such as Ryan.
Started investing in real estate about 4 years ago. When we saw the upside of a property like this and what could become something pretty special, it was a no-brainer.
I'm with Keller Williams. I've been in the business since 2010. Yeah, that's 13 years. And yeah, real estate is an asset class that I know really, really well. And I just regret not investing in it sooner. I regret trying to play the crypto game and the stock game instead of just getting into the real estate game, and actually participating as an investor. It's become a no-brainer, growing my wealth and my family's wealth through real estate. That was the key. That was the key for sure.
I've always been super interested in real estate. Start now. Don't wait. I wish, I was so afraid because you see, a number of an amount of money that you have or have access to, and to make that investment, you have to spend it and it has to go away, and it's scary because you might lose it. But I would, if I could go back to 18 even and tell myself, just pull the trigger, just do it, yeah, it would have made a world of difference.
So I'm a professional property manager. When you understand real estate math and specifically multifamily real estate math, it just makes sense. Gosh, I didn't start until I was 38 years old. And so I would say biggest advice is start earlier.
Well, I've been working in the electronics manufacturing business for a long time, had my own business, and I'm at the stage of my life where I'm getting close to retirement. I'm looking for other ways to wisely invest the money that I've accumulated over the years. I've worked hard all my life for the last 43 years, and I plan to do a little bit more traveling, so the idea of passive investing is much more appropriate for my stage in life as I get closer to retirement and work through retirement, because traveling is very important to me. I don't want to have to work it on a day-to-day basis.
And I could tell that Ryan had done his homework. He knew the numbers really well. I was able to basically have a high sense of confidence that my investment, as far as the price point and the management side of it, would be in good hands.
For me, it's been a process of allowing myself to take more and more risks, because when you take that risk, you can lose big, but you can also win really big.
I felt the team was really strong.
I felt like the underwriting was pretty conservative, not like a lot of what we see other projects written up as.
After watching his presentation, going through the numbers, asking a lot of questions and multiple phone calls, this one excited me.
The catalyst was diversification.
Here's what I think. The numbers on this property are so good. So even a conservative person with their money that needs money to spend, or needs money to invest rather, this is still a worthy property for them to invest in.
The deal in San Antonio was great. There's a ton of retail, commerce, culture in San Antonio. It's little Austin 2.0. Eventually we'll have ASA instead of DFW. It was a solid asset in that it was well maintained, so less risk. It was just an awesome asset at a great price. The returns make sense, and I love that deal.
I would probably make my highest dollar per hour on this Nexus deal.
The price per door, the price to rent ratio was very, very favorable. It was something that you really don't see.
I think the way that it was underwritten, the things that were shown to me, like being so conservative, there's a lot of room here to blow those expectations that were presented out of the water.
I like the professionalism of the commercial investments, so you can find out a little bit more about the investments than you can on the stock market. And I like the idea of something solid, something tangible that I can visit and look at.
It's just a better financial play, and I was comfortable there, so jumped in.
We're heavily in the stock market, and of course, all three of them provide diversification, but with the stock market goes into a bearish mode for any extended period of time, we would probably, if opportunity came up, move funds to support more commercial projects just because it's aligned again with our understanding, our goals, and the people that we'd be able to continue to work with.
You can leave your money in the bank and inflation can chew its value. And or you can invest, or you can invest in an appreciating asset right now. Interest rates are really, really high right now. We're locked into a good interest rate. When interest rates come back down, all that's going to do is increase the price. So your money is going to grow with the asset.
Honestly, I feel like something like this makes more sense, especially if you're already in real estate. Like, this is a no-brainer if you're already in real estate and you're looking for somewhere to park your money.
Like, if I was going to go back and tell my past self what I should look for properties like that where there really is a fallback plan that is safe, but the upside is still huge.
Dave Ramsey says you can get 8%, best case scenario on your investments, and our multifamily investments do way, way better than that. So anybody who's looking for a decent return on their investments would probably be a good candidate, from your middle income earners to high net worth individuals.
I think this is so cool. I've had so many questions from the agents that I work with about these types of deals. And in fact, my business partner that helps me manage properties, like, this is his goal. Like, his goal is to get into a deal like this. It's just exciting. Like, it's something totally different from what we do in residential real estate. It's really cool to be a part of something that's this big.
Yeah, I think there's lots of other people in there, especially in this market today, where the stocks and things are down right now, but they tend to fluctuate quite a lot based on the politics. So I think as people look around and get out of the traditional stocks and investments, that this is a very lucrative market that we have in, especially with the change in the politics.
As far as a current cash flowing property, I'm constantly looking. But at this point in my life, I kind of have a high bit of confidence that I'm going to let Ryan find that, and I'm going to give him the money that we need so we can repeat what we're doing here.
If we surround ourselves with the right people, then it only makes sense to continue doing it. Because to me, the number one key, most important component is having the right people in place, whether it's the investors, the contractors, general partners, or the investors.
Trust the process, and also trusting who you work with, like, and who you're placing money with, like looking at their results on past projects.
Every time I asked you a question on the underwriting, I knew the metrics were there. You always knew right off the bat what they were. And I would ask you questions when I was looking at the spreadsheet, and you always knew the numbers, like off the top of your head. So what that did is give me confidence, basically in you, that you are paying very, very close attention to the numbers. I can focus on what I can focus on, and I have to trust other people to do this. Even though it makes me a little bit uncomfortable to do that at first, over time, I've been able to feel like I can trust you with the numbers. And so when I ask you, hey, does it look good? And you say yes, I said, screw it. I gotta take the chance because I don't have time to do everything myself.
Honestly, just do it. Like, just jump in, even if it's like starting on something really, really small.
If you want to be hands-free and get a return, then you can put your money in here because we have a competent team.
I'm always looking for ways to offset my other tax liabilities. And so the cost segregation, depreciation, asset value was a huge thing for me.
Someone who makes a lot of money, that wants to invest their money, that needs to invest their money, that also needs a big tax break or a big tax benefit, you really can't beat that. That's like one of the main reasons why we were interested in putting money into this deal, was to save money on taxes, like a significant amount.